Me start the start streaming. Okay. Okay. Good morning. This is Dr. Ali with you, and today is June 21st. As I said previously, we are done with the materials of the course by the end of chapter 10. I just want to remind everyone, and if you are listening and you are making good progress in accounting 1, accounting 2 is most likely will be offered on the second summer, and I know there are at least 5 students here that come to class regularly are going to enroll in it. Yeah. So if you are interested, like these ones here, go ahead and hopefully starting maybe today or tomorrow, registration will be online. So you can go and register yourself online for summer 2 for Principles of Accounting 2. All right. So what we are going to do today, and we're not going to stay too long, but we will practice some exercises from the book for chapters 8, 9, and 10. Is that correct, Mr. Bailey?
Yes, sir.
All right. So if we go to chapter 8, let's see. Okay, I know on chapter 8 we needed to do a bank reconciliation. We've done petty cash exercise, and now we're going to do a bank reconciliation. So for that, I'm going to go to Excel so we can do the demonstration while you are watching. Okay, let me go and check my computer, see if it is broadcasting for just a second. Yeah. It is doing it.
Yeah.
Have you ever tried to go back to those sometimes and listen?
No, not really, because I mean.
Yeah, I just check it and make sure it works. Yeah.
Oh yeah, I know you got to, because you got to make sure that stuff is available to the students.
Yeah.
That are here.
Okay. Let's go ahead and go to problem 4, page 329 of the text. Okay, problem 4, page 329. We haven't done that, correct?
We got this.
Huh?
We got
We did it?
this.
Is that the same one? Sure?
Yeah, I got it right here in my notes.
Okay.
Bank reconciliation for Sedona Incorporated.
Okay. All right, then this has been done. I apologize.
I mean, we can do it again. That's cool.
You want to do it very fast? Just overview?
Yeah, give people a better.
Okay, we've done that previously, but for bank reconciliation, the 2 major components are balance per bank and balance per books. On a balance per bank, we start with, now where do we get these 2 balances? Without looking there, in real life, where do you get the balance per bank and where do you get the balance per book?
The balance per bank is like the cash on the bank statements, right?
Yes, sir, the final balance on it. And the balance per books is from
Cash on the books. Like
the
cash,
general ledger cash account. Yes, from there. And like we said, in order to do a bank reconciliation, you have to have in front of you about at least 4 documents. One of them is the bank statement.
Yeah, every deposits and change.
You have to have cash receipts journal,
Oh,
cash payments journal, and the general ledger cash page. All right. So you have to have these 4 documents in the front of you, and then you start with balance per bank. You get the balance from the bank statements, and we add to it deposits in transit minus outstanding checks equal adjusted balance per bank. All right, so that one is clear. And then we come to balance per books. We start with the balance. We get that from the general ledger cash. We start with that, and we add to it what?
yeah, like
We-
notes receivable collected by the bank.
Collections. Yes, sir.
Collections.
We add collections made by the bank on behalf of the company, and because they are showing on the bank, but they are not showing on the
Statement.
books. Yeah. So we would have to add those, and then like notes receivable, and it also has in it interest,
Yeah.
and we have to set that as a separate line item.
Yeah.
We say interest on the note, and then if we have also other interest,
Interest on like the balance or revenue.
yes, sir. We will have to add that, and then
Deductions.
we have a subtotal, and then we do the deductions. And what do we deduct?
Like service charge.
Service,
Like incorrectly recorded checks. Or
Yes, sir.
insufficient fund checks.
NSF.
Yeah, NSF.
Yeah. Did we say service charge?
Yeah, that's
Oh,
the
yes.
first.
All right. So this is the story of the bank reconciliation, and I think now we did the problem. Okay, let me see. Did we do problem 5?
What,
Petty cash.
I believe so, 'cause I did we did it right after. Let's see, June 1st.
We didn't do problem 5 probably.
Yes, we did.
We did
Because that was the petty cash formula. Or
600.
I got it right here.
Very good. All right. So I guess we covered this chapter very good, chapter 8, and then we go to chapter 9. And chapter 9 is controlling accounts receivable. And if we go to page 358, 358 problem or exercise E4A. E4A, and we're going to do the, now remember there are 2 methods for accounting for uncollectible account expense, if you remember. One method is the allowance method, and the second method is the aging of accounts receivable. You remember those 2? You do?
No.
Yeah. 2 methods.
Yeah, because that's when I came real late. So I don't think I was here when y'all was doing that.
Yeah, you were here when we had the names on the, remember when we had the names, my name, your name, and others, and we put them.
Oh, okay. Then the
Yes.
percentage of it being
That was aging accounts
Oh,
receivable,
okay.
yeah. And then you have the allowance method, where you find out the net credit sales, and you deduct a certain percentage as uncollectible.
Oh.
Yeah, so 2 methods for accounting for the uncollectible account expense. So if we go to, I think E4A has both the aging method and net sales method. Okay, so the net sales, that means we got to find what is net sales equal to?
Net sales equal.
Gross sales minus
I wanna say
sales returns and allowances minus sales discount. You don't want to forget that. Yeah. As a business major, you got to remember that. Yeah. All right, that will give us net sales. Once you figure that out, then you multiply that by a certain percentage to be that expected to be uncollectible. So if we read this question E4A, at the beginning of 2014, the balances for accounts receivable and allowance for doubtful accounts were 215,000 and 15,700 respectively. Now, again, what the allowance for doubtful accounts supposed to be is a contra account to accounts receivable. Remember when we talked about that? The way it's reported on the balance sheet, you say accounts receivable less allowance for doubtful account. All right, so if we do a T account for both of these, let's do a T account for both of these. So this is let me just say exercise E4A. E4A, page 358. All right, so let's do a T account for accounts receivable and T accounts for allowance for doubtful account. So if I go over here and I do a line, let me see if I can do a line in the bottom, which is going to be this one. All right, and if I do a line here also, and I'm going to put a line to the right, which is going to be this one. All right, does that look good? All right, so and then we're going to, this one is going to be accounts receivable. Accounts receivable, and then let's see if I can put that in the middle of these. All right, and here we have debit, and here we have credit. All right, and this one, let's do like what did with that, and this one. And let's see if we put another line on the bottom. See, this looks like a good T account. And let me make a accounts receivable a little bit. All right, and let's do one for allowance for doubtful account. Okay. All right, and let me put in the middle, I think over here, a line. And one more here, so we'll be in the middle. Okay, and we do that and do that. Okay, debit, and credit. Okay, so the question is saying at the beginning of 2014, the balances for account receivable and allowance for doubtful accounts were, so for accounts receivable, 215,000. $215,000, and let me make that as dollars. And oops, let me look at the not DRR. It's D1R. All right. So the allowance for doubtful account, where should I put the 15,700?
If you credit it,
Yes, sir. $15,700. Why is that credit? Why is allowance for doubtful account is credit?
because it says it right there in the book.
No, because it's a contra account to accounts receivable.
Yeah, that too.
Is the opposite
One
of
debit, you got one got debit, one got a credit.
yes.
Yeah.
This one is an asset. Accounts receivable is an asset.
Yeah, assets you always debit. So
Yes, sir. And the allowance is the opposite of allowance for doubtful account is always the opposite of accounts receivable. It's a contra to accounts receivable. All right. So during the year, credit sales were $1,600,000. So we're going to put that one. It's a credit sales.
so what that be credit, right? Like,
So if what do you debit, what do you credit when we have sales on a credit?
so
If you were to do a journal entry, what would you debit, what do you credit?
so your debit accounts receivable.
And
your
credit
sales.
sales, correct. So we're going to be on the debit side here.
Okay, another T chart for sales.
Yeah, it's going to be on the debit side. For how much?
1,600,000.
Yes, sir. $1,600,000. 600, 1, 2, 3. Okay. So we have a and collections on account receivables were 1,475,000. So collection is considered a reduction of accounts receivable, correct? So you would have to debit cash and credit accounts receivable. So we're going to put it over here.
1,475,000.
We have collected 1 million. How much?
475,000.
475,000. Oops. F2. 475. 1, 2, 3. All right. And then, in addition, 17,500 in uncollectible account was written off. So we wrote off $17,500. So those, where are they going to go?
The 17,500. Now go to the allowance for doubtful account when they credit that.
Yes, sir. Exactly. Yeah. So let me put that over here. How much is it?
17,500.
17,500. Oops. All right. Now, if I were to do the balance, sorry. Let me take it back. All right, delete. That's not going to be over here. It's going to be on the side of accounts receivable, written off, because we've taken out completely out of receivable. Correct?
Okay.
All right. So we're going to put it over here as a credit for the account receivable, 14,000.
It says in addition 17,500 and uncollectible accounts.
Wait. Let me go. Let's do the number by number first. 17,500. 17,500. Oops. 17,500. All right. That means we're going to debit allowance for doubtful account.
Oh, okay.
Yeah, we debit allowance for doubtful account. Okay. Good morning. Good morning. For 17,500. All right.
Not putting in dollar sign.
Huh?
Like,
Yeah. Okay. So as of this moment, I think these are all the numbers we have for now. All right. So let's do the balance on each side. Let me do that. I hope it works since we did the alignment. If we add these two, yes, we got it. And if we add these two, oh, let me do this one also. If we add these two,
we make that one into a dollar sign first.
so which one is larger?
Oh no.
Okay, these are the totals.
Yeah, the debit.
Okay, these are the totals. Bold. Let me bold them. All right, so the left side is larger. By how much?
$537,500.
Are you sure?
No.
1,815,000 minus 1,492,500.
$322,500.
That makes sense. 322,500.
$1,000.
And these are, let me put a dollar sign. So this is the balance of accounts receivable. And I'm going to write down here the balance. Okay. Now let's do the same thing for which side is larger, the left side or the right side?
Left side.
By how much?
$1,800.
By 1,800. Okay. And let me put the dollar sign. So then the question becomes, let's move on for now. Using T accounts, which we did, using T accounts, determine the year-end balance of accounts receivable and allowance for doubtful account, which we did, which is going to be 322. Let me bold those. And let me underline that. And the balance for allowance for doubtful account is let's make it a undo. Let me just do undo. Okay, I'll just leave it as is. 1,800 bold, and so it will show up. Okay. All right. So we already determined what the balances are. All right. Year-end balances, and okay. Then prepare the year-end adjusting entry to record the uncollectible account expense. Now remember, the 1,800 is estimated. It's not the one that we really going to consider as an expense. This is an estimated. Account receivable is this. This one is the right balance, and the 1,800 is the estimated to be uncollectible. So the question is, we're gonna see if we have a certain percentage to be written off. All right. Using T, then prepare. Okay, for each under for uncollectible account each of the following condition. Also show your end balance sheet presentation of accounts receivable and allowance for that uncollectible account. A. Management estimates the percentage of uncollectible credit sales to be 1.2%. okay, of total credit sales. Okay, 1.2%. How much is that? Is that 12%? No, 1.2, I think.
Yeah.
Okay, let me get the calculator. Okay, 1.2 divided by 100. So you say it's equal like that, 0.012. Okay, times credit sales. Okay, which is what? What is the credit sales?
1,600,000.
1,600,000. 1, 2, 3. So that gives us 19,200. So if we were to use the credit sales, and 1.2% is estimated to be uncollectible, therefore the uncollectible is 19,200. So that's the amount we need to write off. So for A, we're going to debit. We're going to do a journal entry. Okay, for A, debit. What do we debit?
Account. No.
We debit uncollectible account expense or bad debt expense, one of the two. Uncollectible account expense for 19,200. 19,200. Okay, and then what do we credit? Let me just do this for a second. F2, make that a little bit far from the A. A, and then make the number a little bit far. All right, and then we're going to credit. What do we credit? Guess.
We debit that. We will credit accounts receivable. Right?
Because it's going to go out of this allowance.
Yeah.
So we're going to credit the allowance for doubtful account.
Oh.
Yes, sir.
Oh.
Okay, we're going to credit the allowance for uncollectible account. Allowance for uncollectible accounts for 19,200. All right. So this is A. Then how would that show on the balance sheet? How would that show up on the balance sheet? Okay. Remember, on the balance sheet we say account receivable less allowance for doubtful account. So account receivable is, we know how much it is. So on the balance sheet, on on the balance sheet we say, usually you're going to see accounts receivable, how much is accounts receivable?
322,500.
Yes, sir. Account receivable 322,500. Okay, less allowance for doubtful account. Okay, less allowance for doubtful accounts or uncollectible accounts. So how much is the allowance for uncollectible accounts?
How much is the allowance for
Uncollectible accounts, yeah.
19,200?
Okay, 19,000 what?
200.
200. And where did you get that from? Yes, sir. You're right. 19,200. So let me just do that. F2. So, and the result is,
Are we subtracting?
yeah, say, what does it say? Accounts receivable less. All right, and therefore, account receivable is, balance in account receivable is going to be,
303,300.
how much?
303,300.
Okay, let me put a line under that. Okay. Okay, let me. $17,000. So we have 1,800. 1,800 is the balance of the allowance for doubtful account.
Allowance for doubtful accounts is the 19,200, right?
No, we look at the T accounts. This T account here.
Oh, so you want to subtract that 1,800 from the accounts
Yeah.
receivable? Oh.
So I'm thinking that we from account receivable is, I'm sorry, the allowance for doubtful account 17,500. So if we take okay, if we take
322,500 minus 1,800.
no, if we take 19,200, 19,200 minus 1,800, what do we get? 17,400. Yeah, that's what we should, that's what the allowance for doubtful account.
Oh, okay.
Yeah.
Yeah, we subtract that from the accounts.
Yes, sir.
Okay.
So it's going to be 17,400 instead of,
19,000.
yeah. And therefore the balance is,
305,100.
yes, sir, 305,
100.
100. That's how it should show on the balance sheet, yeah. Remember, accounts receivable, just like building, machines, remember we say building less accumulated depreciation building. For accounts receivable, we say accounts receivable less allowance for doubtful accounts. Okay? So that's how, now then the question is also percent and based on the aging, no, we're not do the aging yet. The allowance for doubtful account was 17,400. That's okay. So that's what A is all about. That's what A is all about. All right, now we're going to do B. B. What does B say?
Based on the aging of accounts receivable, managed estimates the end of year uncollectible accounts receivable to be 19,350.
Okay. 19,350. Okay, 19,350. Let's go back for a second. Okay, look at the allowance for doubtful account. We have a balance of 1,800, correct? And but they are telling us that it has in it 19,000. They're telling us that management estimates the end of year uncollectible accounts to be 19,350. Okay, that means we know we have a balance, a debit balance of 1,800, and this is the. Is this an overestimate or a lower estimate of allowance for doubtful account?
Overestimate.
Way overestimate. You know why? No, I'm sorry. Way underestimated.
Oh.
See, it should have a balance of.
1,000
The balance should be credit.
Oh, yeah, okay.
It's the opposite of again. The balance should be credit. But we have an extra 1,800. So the 13,000, 19,350 has to go down by 1,800. If we were to use the allowance, the aging of accounts receivable. So that's the key factor in aging accounts receivable. Bless you. You got to look at the balance at the beginning of the year and the balance at the end of the year. At the end of the year, it was 1,800 over, because it's debit. Well, I'm not saying over. It's way underestimated. Yeah, by 1,800. All right. Let me put it back. Say we did not estimate enough. Oh, sorry. We estimated too much. Let me put it this back. We estimated an extra because the balance should be here. The balance should be on the credit side, but we have a balance, a debit balance. Therefore, we have to subtract it from what the estimate is. It's estimated to be 19,350, correct?
Yes, sir.
If this balance is here, then we would have to add to 19,350. Okay, therefore we're going to say,
You gotta subtract.
yes sir, 19,350 for B, 19,000, okay, which is what? The 19,000. This is the estimated uncollectible account. Estimated uncollectible account. They are telling us it is 19,350, correct? Account 19,350, and therefore we're going to debit, or we have a we're going to say less the debit balance. Okay, less the debit balance. Okay, of 1,800. Was 1,800 correct?
Yes, sir.
1,800. Therefore, what we are writing off is, let me just, okay, that is, let me do this. All right, how much is the difference?
17,550.
17,000?
550.
Is it 550? Okay. 19,000. 17,550?
Yes, sir.
Okay, and we are short 100.
With the number on the credit side.
Huh?
That wasn't the number on the credit side at the top.
Anyway, and just stay with this one. That'd be fine. Yeah. All right. Okay. This is the problem E4A. Okay, that, and then we're going to do a problem E8A. Sorry, this is E4A. Now we're going to go to page 359. Page 359, we're going to do E7A, and we're going to do E8A. E7A and E8A. E7A, page 359, Norcia Company, which has the allowance method. Okay, allowance means we deduct certain percentage of accounts receivable. Okay, began the year with account receivable $32,500 and allowance for uncollectible account of 32 credit. The company sold merchandise to Bruce Willis for $3,600 and later received $1,200 from Willis. So that means we start with, and this one I'm going to be on the board. You think I should do it here also?
Let's clear that up.
Okay.
Let's keep the charts up, because that's what we're going to be needing.
Okay. So let me go to a new sheet, okay? A new sheet.
Oh, okay.
Or we better leave it on the same sheet, go down?
I was just saying, like, delete the numbers that you put on there, but keep the charts up for accounts receivable and
It's all right. We can do one easily. Yeah. So for E7A, all right, E7A, page F2. Okay, page 359. Okay. Let's do a accounts receivable. It's very easy. We just got to do a long one like that, and we put a line. See, it's easy. And one over here, and we put a line to the right. See how easy it is? And we do one for allowance for accounts receivable. Go back to this one and do a line to the right. Right? Okay, accounts receivable. Let's make these one. Combine these accounts receivable, and this one is allowance for, let's combine these. For allowance for uncollectible accounts. All right. So going back to the question, it began the year with accounts receivable have balance of 32,500. So let me combine these and 32,500. Oops, sorry, I'm in the wrong place. Okay, let me do the debit and credit as debit. And this one is a credit. Combine and credit. Okay, and do the same over here. This is debit. And this side is credit. All right. So let me combine these. Let me also combine these and these. So we have a few lines. And then we put the dollar sign. All right. So 32 for accounts receivable, 32,500. All right. And allowance for doubtful account has 3,200. So let's do the same here. Combine. 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 Combine and see what I'm saying, doing? Okay. These are dollar sign and these are dollar sign. So a credit balance of $3,200. Okay. The company sold merchandise to Bruce Willis for $3,600. All right. So that means we have gonna debit account receivable for $3,600. Okay. And if we were to do a cash T account, we will have to. So we're not interested in that. And later received $1,200 from Willis. All right, and the rest of the amount due from Willis for whatever that amount is. Yeah. All right. Using T account, show the beginning balance and the effects of the Willis transactions on accounts receivable and allowance for uncollectible accounts. All right, so if we were to add these two, that's going to be our ending balance for now. Okay, so total is 36,100, correct? And then it was there was a collection of what?
You said 36,100.
Yeah, the total.
Oh yeah.
Okay, we have 32.
Well, don't you have to credit the 1,200?
yeah.
Oh, yes, sir.
Yeah.
Yes, sir. You're right.
The rest is uncollectible.
Yeah, 1,200. So 1,200. Okay, that means it's going to be what here? Minus 1,200. 36,100 minus 1,200 is
36,100 minus 1,200. 34,900.
yes, sir. All right, and then
Don't we have to subtract 3,600 minus 1,200?
yes, sir. Bruce Willis. Okay, so the company sold merchandise to Bruce Willis for $3,600 and later received $1,200 from Willis. The rest of the amount due from Willis had to be written off. So we have to write off the
We ain't debit that for allowance for uncollectible account.
yeah, but see, they haven't asked that yet. So how much was written off?
2,400.
Okay, how much?
2,400.
2,400. Okay, now how much is the balance? It's going to go down for another 2,400.
It's gonna be
The final balance,
32,500.
32,500. That is the final balance of accounts receivable, 32,500.
We're back to where we started.
Okay, on the allowance for doubtful account, we started with How much did we start with?
3,200.
3,200, and then we written off
3,600.
3,600. So, all right, we written off 3,600, and then no, we written off
2,400.
2,400. Yeah.
Y'all like, he paid 1,200.
Say it again.
2,400. That's how much
Okay,
they wrote
delete. Okay, yeah, we written off 2,400. Okay, that's correct. We leave it as it is. And then, so what is the balance now?
800
How much?
credit.
Credit 800. That's correct. All right. So let me write down here the balance. Oops. The balance. And this one also here is the balance. So we'll have confusion. All right, that's all what's needed from us here.
Okay.
They don't need a journal entry. Okay, that's good. All right, let's go to question E8A now. E8A. E8A. Page, same page, 359. 359. All right, what does this ask? Determine the interest on the following notes. All right, what is the formula for finding out the interest?
You got the amount of the money borrowed, and you got the rate of interest, and the length of the loan.
So what is the formula? Interest expense. Interest is equal to,
Principal
that's what I wanted you to say. Principal
times the rate of interest,
simple, times
the time or length of loan.
interest rate first,
Oh yeah, interest rate.
time interest rate
Times the length of the loan.
times time.
Times
Some people, for the multiplication, they will put the star, okay, instead of the x. But that's in Arabic, the multiplication is an x in Arabic.
It is.
Yeah.
It's over here too. X or star. And sometimes even a dot.
X or star, yeah.
And sometimes
Different variations for it.
See, for Excel, you have to put the star.
Oh.
I don't think the x will work, yeah, but it's multiplication. You know, the Arabs are the ones who were the first inventors in mathematics. The Arabs, yeah. They are the ones who created the zero.
Oh.
The Arabs, yeah. Well, there's a conflict whether it's the Arabs or the Indians. They always fight whoever created the zero. Imagine you don't have zero in the numbers. If you don't have zero now, you can't.
I would owe somebody something.
Yes. So they calculate this. Created by either the Arabs or the Indians, but most likely I would say the Arabs. Yeah. So by us, the Arabs. So let's take a look at these ones. A, we just follow this formula. A says the principal is 38,760, 10%, 90 days. So how much is interest? It's going to be 38,760 times
10%.
times 10% times
90 days.
you just said 90 days like that.
That is 90.
You can just say times 90.
90 divided by 265.
Yes, sir. Divided by 365. 90 over 365. Because that's always out of the year. Always out of the year. Yeah. And this, the percentage is always out of 100. Okay, so you have to do it 10, 5, whatever the number is, over 100, yeah. And that's equal to what?
That's .24 for the 9065.
Equal what?
Let me see. 38,760.
What?
No, I'm starting to.
Ah, okay.
Nice, let me find the answer.
Yes, sir. 900?
30. You get that 930.
Come on now.
955.
955.
I don't know. I had clear my.
Point 73. See here, you do. Let me clear. 38, 760 times 9 times 10 divided by 100 equal this much times 90 divided by 365. That gives you 955.7.
This is what you got when you times it by the 10% and times.
90 divided by 3.
Yeah, 955.70. Do we have to do the rest of them? It's the same way, yeah. You don't have really to do. Let's do one more. Let's do E. Let's do E. Just practice. Let's do E. All right, for E, 18,360 times 6%.
It's like 0.06.
I'm going to put the 6% like decimal times 0.06 times 60 over 365.
Yeah, 181.
How much?
181.
Yes, sir. Equal,
8 cents.
yeah, 181.08.
08.
All right, it's the same way that, hey, how y'all doing today?
Aren't you good?
Very good, yeah. Thanks.
You're welcome.
So that's all the practice that we have for chapter 9, and by the grace of God we will on Monday do practice for chapter 10, and that will give you an idea on how to do the assignments for the chapters. Okay, because I tried to pick problems that look like the assignments, yeah. So you won't be seeing any miracles or
My
anything.
stuff Monday.
Okay, so you have yours.
Everything.
Yeah, I need to staple more.
Let me get the stapler.
Yeah, okay. So you got the other emails, right? Seven,
Mhm.
eight. Alright, some emails last night.
Hey, my bad, bro. I was Z last night when you called me.
Yo, I asked man, that's why I'm here. This morning, man, I'm just tired. Like, bruh. I'm speaking of man, did you see that stuff?
Yeah.
Alright, let me go check my email. I'm straight up burned out.
So you said either today or tomorrow, they're probably gonna add on the principles of accounting too.
Yeah. Yeah. I'm going to call the registrar's office shortly.
So if you take a class like that you previously took and you get a higher grade on it, will it change the grade
Yeah.
that you
Yes, sir.
got?
The new grade will count.
Oh, okay.
Yes, sir.
So that's what I probably just gonna have to do because it's got nothing other but basic courses. But when I first got here, I was not as good as a student as I am now. I got some C's.
Totally different, yeah.
Yeah, I got some C's on some classes. That one of the
You done with the final exam too?
No, so that's the
Oh,
last
those
two.
are the cases.
Yeah, these are the cases.
Okay.
These are the last two, because I already gave you two.
You guys need to give me some material if you want to make it and go to accounting too.
I
Yeah, you have to
haven't
give me.
started the exam yet. I'm gonna do that over the weekend.
If you have, now remember you're gonna have a bunch of extra credits
Oh yeah.
for helping. Yeah. If you help again, same thing. Yeah.
Oh yeah. I've been helping. Even some people in the online. Even some people taking their classes online. I help some.
Who called you?
Jared Walsh.
But he never hasn't turned in his yet.
Oh, you should have.
Yeah, he hasn't turned in. He only gave me some cases. Emailed me some cases. Yeah.
Well, that's what I helped with some cases. I sent him like pictures.
Ah,
I sent
okay.
him pictures, but
Tell him if you talk to him, tell him he needs to hurry up. He only have a few days of next week.
oh yeah.
I'll-
I seen the email that you sent out to everybody.
And
Yeah.
And it has a count too, been added to the next.
Nah, they should have it today or tomorrow.
Yeah, Dr. Jones recommended it. Yeah. So. Okay, let me get out of this, guys, and
So you said, maybe. You said,
stop streaming.